That one's live. All right, we're going to start this one too. So your headphones actually are the ones, those are your headphones.
I put them on.
Yep. That's kind of cool. That's not a bad angle right there. All right, so let me adjust your volume. And so if you look on Facebook, you should be able to see it. Hello, hello, hello,
I'm
hello.
going.
Hello, 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 hello. Yes,
No, I don't.
Oh, no, no, no.
Okay.
Yeah, do you hear anything?
No.
No? She doesn't hear anything.
Yeah, I no.
You do now?
Yeah.
Okay, all right, great. Is it too loud? I can adjust it. Good. Lower,
You got
lower, lower.
You need help with her volume?
Huh?
I'm
Did
good.
you need help with her volume?
I think she hears it now.
Oh, she hears
I'm
it?
good.
Yep,
Okay.
yep. All right. About 5 minutes. And those of you that are, tuning in, I have a special guest today. Oh my goodness. Kumud Jain, and she's with O2 Mortgage. And it's kind of cool how she came to me, found me, and it's so funny because it's right in the timing of the topic that I'm going to talk about, which is down payment assistance programs. And, she's going to share a little bit, and so I'm really happy to have her. Please welcome her, say hi on the comments. I'm doing it kind of cool because I have actually my business and my personal Facebook, so I think I'm leveling up here. My production background, thank you, Vive Church, thank you, is coming in handy, and I'm figuring, you know what, why not? And maybe at one point I'll do Instagram Live. Because, not a lot of people wake up at 6 o'clock in the morning because KFAX AM 1100, that's when it airs, and most people don't wake up that early in order to catch it live. So, no, not really live, but recorded. But, I figure, any way to get the information out there is important to me. So I appreciate you tuning in, and I appreciate, just any questions that you do have, especially once we do record. And it gets posted on my page. Please share the information. It's important, necessary. And I'll try to say hi to folks and give a little shout out if I can. So just bear with me though. All right, so we're gonna be starting in about 4 minutes. Go ahead and get your popcorn and adjust your volume at work. Hopefully maybe you're on break. And we'll try to keep it within the time frame of 11 to 12. You'll be able to hear everything today. I'm not having anyone call in, so that's a cool thing. And if you didn't know about different types of mortgages, we're going to talk about that today too. Talking about different types of mortgages, conforming loans, jumbo loans, fixed rate versus adjustable rate, and even government insured home loans. And so we're going to be able to talk about all of that. And hey, if you do have any questions, do write me a question, because I might not be able to see your comments right now, but later on I can answer those questions, maybe even directly, or hopefully at a time that we are recording, I can answer them in between our breaks. So don't be afraid to ask some questions. Who's that? Ronnie? Crystal? Adonai? Hello. Hi. And I got my husband on there. Got Scotty going. Hello, Scott. Share the page. We got about 2 minutes, and then we're going to get started. Does she want anything to drink? You're good?
Yeah. Should I get maybe for later?
Yeah, real quick. I got 2 minutes. Hold on.
Yeah.
I'll get some hot water.
Perfect, thank you.
They do have some tea, but I'm more like right, 11 o'clock. As ready as I'll ever be. Let's go. All right, here we go. So another moment in faith and home buying history. So yes, I'm here equipping people of faith with the home buying process, and I'm super excited because today is a topic that's near and dear to my heart. And the reason why is I have a lot of first-time home buyers that I work with, and any way that I can get just information out to them that encourages them, that activates faith. That's what I'm going to try to do. And so I have a special guest, and she'll be on in a little bit, but her name is Kumud Jain with O2 Mortgage, and she's going to be talking specifically about down payment assistance and alternative programs that you can utilize. Most people don't even think that they're out there, but they are. And it doesn't matter whether you are the wealthiest or not. There's still programs that can work for you. And hey, if you can save a little bit of money, why not, right? So first and foremost, let's talk about activate, because remember, the 3 points that I want to try to cover every single time that we meet is activation, number 1, education, and empowerment. All right, so we're going to talk about activation a little bit, and I've been kind of thinking about wisdom. And wisdom, what is wisdom, right? Listen, the dictionary talks about wisdom as being the quality of having experience, knowledge, and good judgment. Basically, the quality of being wise, right? Intelligence, understanding, insight, right? It's important to have, and most people think that they don't have it, and guess what? I got an answer for you. You can have it, and because the Bible actually says that if you ask for wisdom, you can get it. And it also talks about wisdom like this. Let's look at Proverbs 4, 6 through 7. Of course, I love my TPT version. It says, stick with wisdom, and she will stick to you, protecting you throughout your days. She will rescue all those who passionately listen to her voice. Wisdom is the most valuable commodity, so buy it. Revelation knowledge is what you need, so invest in it. Come on, how fitting is that today when we talk about wisdom and knowledge and education and such. And I can say this, that in my career, the gaining of wisdom, and even what I learned from losing homes, and those that listen to some first podcasts. I've lost homes before. Got the wisdom to get them. Husband knows this as well. And I gained a lot of wisdom and insight. And as I was going through it, I completely did not understand and know that, hey, I'll be talking about this later on to somebody and offer them knowledge and information. No. That was not it. It was truly, we thought we did the right thing. You pay the money, 20% down, and hey, you're supposed to have a home and have it forever, and do your investment, do everything you're supposed to do. But that's not always the case. And were we lack of wisdom? Yes and no, but there's some things that you can't predict, right? Like the downfall of a market, you can't predict that. However, when we bounced ourselves back up, we said, okay, faith was a big component of it, but it was also wisdom. It was also understanding the process of how to get back and bounce ourselves back so that we can be homeowners again. And, hey, we did look into down payment assistance programs. As a matter of fact, my husband was so wise, and Scott, if you're listening, yeah. He was so wise that when he first purchased his home, which was a condo over in LA, and he didn't have all the money. However, there was a neighborhood assistance program that helped with your down payment that he actually sought out. And him and his wisdom, because he actually went through the program and was able to find a home over in LA, one of his first ones, and actually he is probably the second next to his parents of a homeowner in his family. And he was able to go out and finally, find a place. And now, granted, this program, it was more of a kind of an equity share type program. So meaning that if you go into it, they help you out with your down payment. But when you do sell it or refinance, do anything that triggers a sale or a purchase or anything that triggers anything, right? You have to pay them back a percentage of your equity. And that was okay for him because the biggest thing is that he wanted a house. Not wanting to rent anymore, and he wanted to make sure that his money was going to something that was going to establish him later on in life. And so I'm so thankful that he did, because again, that was one way in which we were able to leverage that particular property. And even in this market, and this is another thing too, in this market, even if you do equity share programs, people are like, well, I want to keep all my equity. I don't want to share it with anybody, nor do I want to, just give a portion of it away. Okay, well, that's great. However, here in the Silicon Valley, which is so wonderful, this is the one area that if you do even have an equity share, and I've seen it multiple times, having an equity share is actually a very big benefit to to be able to get into the home, like having your first foot in, right? But then we gain so much equity in such a short amount of time. Let's make that clear. In 4 years, 3 years or so, you can see an increase of about $50,000 to $100,000 or more, all depending on the area and all depending on what kind of home you have in the beginning and how much work you put into it. So that being said, it makes sense if in the front end, I can get a little bit of help. But in the back end, I just got to pay a little bit. Yeah, I'm not going to be mightily as rich as I thought I was, but guess what? It's probably still enough for you to move into another home. It's probably still enough for you to move into and upgrade your home on where you first purchased. That for us was the possibility. We were able to actually upgrade from a condo to get to actually a house. And it really worked for us. And so I'm a very big, advocate of down payment assistance programs. And another thing, we'll talk about in a little bit, I honestly feel that in this particular 2020 coming in and the people that I come in contact with, I am of the mindset, and I believe it, and you can quote me on this, that this next year, we're going to have a lot of professional millennials, or those that are in the professional realm, that are going to capitalize on these things. I honestly believe that they said, you know what, why do we have to pay full price? Yeah, we have the money. You may or you may not, especially, you have to qualify, or we have to just work to get this particular money, but you know what, why do we have to do that? If we have actual assistance that we can actually tap into to help us, or deferred payments, or whatever it may be, why not do it? And so I'm believing that, and I'm hoping to spearhead this on just my own, sphere of people that I come in contact with, clientele base, is that when you come in contact with me, I'm going to offer it. Hey, have you ever thought of down payment assistance? Have you ever thought of professional, and they have it, and we'll talk about that in a little bit, professional assistance on being able to purchase a home. And so, yeah, I honestly think that is, and if you are one of those and you're hearing me, you can reach out to me. You can talk to me about it. I got the necessary people and the resources. Hey, we talked about wisdom. If you want to be, wise in this pursuit in the next year, which I know that a lot of us do, reach out to me. You can contact me. There's a contact page on TamikaEllsworth.com. You can also, check out my Facebook, Instagram, Tamika Ellsworth. Pretty simple, right? And later on, we're going to be talking again to Kumud, and we'll be giving out her information. And hey, if you have any questions, comments, concerns, anything that you wanted to speak on, please, I encourage you to call in and to take the necessary steps, because in Proverbs it says, hey, revelation knowledge is what you need. That's what it says. It says invest in it. And so I'm really hoping that today and in the next 40 or so minutes that you're with us, that you'll be able to invest. Invest time, invest resource. You might be on your break, you might be on your lunch, or you might not be. Look, don't get in trouble though, but you may be able to invest in this time in order to know that, hey, home ownership is a possibility. Remember, it's a faith step. And with faith, when you are empowered with a lot of things, you're able to take that step a lot more smoothly. So, again, it's Tamika Ellsworth, and I'm equipping people of faith in the home buying process. Stay tuned for our next segment. Wisdom. I should mention she's a she too, okay? That means listen to your wives. She's wise.
Yeah.
Hi, everybody. Let's see, I have Marcia. Hey, what's up? Silva's in the house. Hi, everybody. So again, you've caught me on a topic of just being able to get into a home with very little down, or with assistance, which is who cares? Like if you have assistance, you have assistance, but the biggest thing is you don't know when people get assistance or not. You can have assistance from your family members,
Yes.
an uncle, an aunt. That's still assistance. Parents sell the house and give you some equity. That's assistance.
Yeah.
So let pride not be the reason why it stops you from proceeding forward and understanding about things. So the next segment, we're going to talk about types of mortgages. Most people don't know about them, but I'm going to let you know. And in our third segment, that's when Kumud's going to come on and talk even more about the assistance programs. And I'm going to talk about that one program that you can actually get up to $150,000 to help with your down payment. And there's a beautiful couple that I'm working with now, and I believe that I'm going to give a really good praise report or update on them and their situation, because it came just so perfectly at this time. So, all right, let's get ready for our second segment.
My kids are watching.
And over there too, remember there too. All right. So we're back again. All right, and we've just kind of recapped a little bit about wisdom, Proverbs 4:6-7. It's good to have it, invest in it, buy it. So the Bible says, especially in the TPT version. But we're also going to talk about types of mortgages. Okay, we're going to get practical here. We're going to talk about the education component of this show, and what's also too near and dear to my heart, because I think when people are educated about something and they have the knowledge about it, they're able to move and actually catch vision for their next steps, right? To help with faith, to push them out and say, look, I'm good now. I'm going to go out there and try, right? So the next thing, we're talking about types of mortgages, and there are several loan options available for home buyers with a low down payment. These programs allow people to enter the home buying market in a non-traditional way and make the dream of home ownership possible. Okay, so the first thing is going through conforming loans. Okay, so that's pretty typical in a lot of ways. A conforming loan is the one that meets the underwriting guidelines of Fannie Mae or Freddie Mac. And now those two are two government-controlled corporations that purchase and sell mortgage-backed securities, or MBS. So simply put, they buy loans from the lenders who generate them and then sell them to investors via Wall Street. So a conforming loan falls within their maximum size limits, and otherwise it conforms to pre-established criteria. So that just means that that there's certain parameters, and that's it. That's what it is. And it has to conform in those. But it gets free traded. Okay. So those of you that you didn't know, those are conforming loans. The next one would be called jumbo loans. Okay, J-U, just like jumbo loans. And a jumbo loan exceeds the conforming loan limits established by Fannie Mae and Freddie Mac. Okay, so this type of mortgage represents a higher risk for the lender, mainly due to its size. So your millions, your 800,000s to your millions plus. Okay, and as a result, jumbo borrowers typically must have excellent credit and larger down payments when compared to conforming loans. Okay, so that's why sometimes you see that if you've ever spoken to a mortgage consultant or a loan officer, they kind of say, okay, well, you need this credit score in order to qualify. Now remember, different banks, lenders, brokers, they all have different kind of limits that they will do to, different parameters. A lot of the big banks, as far as your Bank of America's, your Chases, that's why they say, nope, you only need to have this amount of FICO score in order for us to really even work for you to get a loan, okay? So conforming loans, they come in and they say, okay, well, we can help you too, all right? But then also jumbo loans, large down payments, and they have interest rates that are generally higher with jumbo products. Why? Because the risk is a little bit more, okay? This is why sometimes you see, different times, different people can have lower rates and higher rates. Well, you gotta figure what's the purchase price of the home, or what's the loan amount that they're getting. That does make a big difference too, right? All right, so those are types of mortgages. So the second thing we're gonna talk about is fixed versus adjustable rate mortgage, okay? And so those of you that don't know, and I know there's a lot of people that don't, so you know what? Make sure you have this podcast and you save it, okay? So as a borrower, you get to decide whether you want a fixed rate or an adjustable rate mortgage loan, okay? All loans fit into one of the two categories, or a combination hybrid category, okay? So the first one, fixed rate mortgages. Fixed rate mortgages. They have the same interest rate for the entire repayment term. And because of this, the size of your monthly payment will stay the same month after month and won't change. This is true even for long-term financing options, such as the 30-year fixed rate loan. And so if you remember, probably your parents, have said, no, don't do anything less than 30. They do have 15. They have other, amounts that you can do now. But back in the day, like for instance, my parents bought, in the 1980s or so, and they're still in the house, by the way. But when they bought, the price that they had did in their adjustment rate, or the amount of years, for their home, good God, it was 30 years, and that's all anyone actually ever did. And 30 was a hot commodity, I think they had 15 for a long time, but then when they got to 30, or like 2015, then when they got to 30, people were like, yes, I want that, because I want my payment to be the same month after month. I don't care what happens with the market adjusting, I don't care. I want it to be the same for the next 30 years, okay? So that was the safe route that a lot of people took, especially if you knew you wanted to stay in your home for a long period of time, right? And it makes sense. It's a little bit more safe. It's not as risky to do, and especially if you're going to stay there and you're not looking at the, you're not looking at maybe a resale or moving in 5 to 8 years or changing school districts and such. That's probably the one for you, okay? And then you also have adjustable rate mortgages, and they're also called ARMs, the ARMS, okay? Adjustable rate mortgages. And they have an interest rate that will change or adjust from time to time, okay? Typically, the rate of an ARM will change every year after an initial period of remaining fixed and is referred to as a hybrid product, okay? A hybrid ARM loan is one that starts off with a fixed or unchanged interest rate before switching over to an adjustable rate, okay? These ones can be a little tricky. My husband and I, we had ours when he had his home rate. We pulled money out, and then we got into our new home and put 20% down, and we were like, hey, we're going to take this, we're going to flip it, and we're going to buy another place, we're going to rent this one out, we're going to do all that, right? And actually, no, it wasn't 15 years, it was a 5-1 ARM. And so in 5 years, we needed to do what we needed to do and needed to gain its equity so that we could pull the money out and actually purchase another. Well, the market kind of tanked in 2009, 2010, so that didn't work out for us at all, because the amount that we had fixed for just that little bit of time, it ballooned, meaning it adjusted even higher, and we couldn't afford that payment because, at the time in the 5-year period, it didn't do what it was supposed to do, and we couldn't refinance to something that was lower. So we kind of got stuck and had to short sell it. So those can be very, very, you got to be very careful with those. A lot of people use those if they know they're going to flip properties, kind of moving through properties, and they already know, the risk associated with that. But if you're trying to stay into your home for a long time, it's very tricky to get in. You can get it at a nice rate. It looks good, but it'll bite you in the butt if you're not ready to make those adjustments later on when you're, when you don't have any interest-only payment and you have to actually do the principal, interest, taxes, like you have to do everything. So just be careful with those type of loans. Last one, we have government-insured home loans. And these are the ones I deal with on a big basis as far as my first-time home buyers, okay? So the first one, FHA loan. You probably heard that before. It's by the Federal Housing Administration. Mortgage insurance program is managed by the Department of Housing and Urban Development. So it's a HUD property, okay, or a HUD loan. FHA loans are available to all types of borrowers, not just first-time home buyers. And the government insures the lender against losses that may result from borrower default, okay? An FHA loan allows you to make a down payment as low as 3.5% of the purchase price. Okay, but you'll need to pay for mortgage insurance, increasing the size of monthly payments, and sometimes that increases about $500 or $700. But they're going to get you in for a small time, but you're going to have to make a bigger payment because it's insured. Okay, and so some people, hey, they can do that, and a lot of times my clients, they can do that. They make the money, they just don't have the down payment to get inside the home, and that's fine. FHA loans are a little bit more restrictive. You have to make sure that health and safety issues are with the home. You can't get a dilapidated house and broke down. It has to be pretty decent. So we can talk a little bit later on another show about specifically about FHA loans. But then the next one, VA loans. And so the U.S. Department of Veterans Affairs, which is the VA, offers a program to military service members and their families. Similar to the FHA program, these types of mortgages are guaranteed by the federal government. The main advantage of the program is that borrowers can receive 100% financing for the purchase of a home with no down payment whatsoever. I love these loans. And these are not even these are benefits. I don't even call them like programs or assistance. These are benefits that those that have served in the military and their families. There also are programs where the family members can actually benefit from this too. The Navy Credit Union has a great one that they do as well. But this is something that is near and dear to my heart. I'm a military relocation professional and a military specialist, and I believe that this particular benefit needs to happen across the board with as many vets as possible, and you can reuse them. And so, coming up in a future segment, or actually future episode, I'll be talking specifically about VA loans. So stay tuned for that, because there's some great stuff that's happening in 2020 for them. The last one, and this is not even something that's really, really known a whole lot, but is USDA or RHS loans, which is United States Department of Agriculture, or either Rural Housing Services. Believe it or not, like Farmers, for instance, offers a loan program for rural borrowers, and it's managed by the Rural Housing Service and is offered to rural residents who have a steady, low, or modest income and are yet unable to obtain adequate housing through conventional financing. Income must be no higher than 115% of the adjusted median income, which varies by county. So yeah, that in a nutshell, we've just talked about types of mortgages, and when we come back in about 20 seconds, we're going to be talking to Kumud Jain with O2 Mortgage. We're talking about different programs that help empower you for home ownership. Stay tuned.
You are so natural, like so natural. If I steer, just bring me back.
Don't worry about it. You'll go off on a tangent. It's okay.
Yeah.
No, we all do. Don't worry about it. So we're gonna actually start about on the first one, which is departing residence program, and have you talk a little bit about that first.
Oh, the departing, not the.
Oh, but you got to have that.
Right, but not the down payment assistance?
We will.
Okay, so.
If you want to go there first, we can do that
Yeah,
first.
let's go
Okay,
there
so
first.
which one do you want to do first?
Let's talk about the down payment assistance.
Okay, so
Yeah.
the 5% down and then the 1%? I'll just say.
Down payment assistance.
There you go.
Yeah.
We'll talk about that. We'll work it that way. Hi, everybody. Hopefully you're still turning in. Hey, got Graham, Cedric Hall. What's up? How you doing? Nate. I see Marco's watching as well. Hi. This is for you guys too, for real. I have no clues up there. I can't even read that. But hi up there. I think I like that. I like that. That view up there more than anything. So you ready? Good. We're about to get started. And so when you talk, just face it, talk into it. Yeah. All right, let's go, Joel. All right, so we are equipping people of faith for the home buying process. I have my new friend and colleague here, and she's going to be talking about just down payment assistance programs, and then she's going to skirt on to different alternative solutions. So this is, I want to welcome, everyone, if you can't clap, give a welcome to Kumud Jain with O2 Mortgage. Hi, Kumud.
Hello.
Hello. So, you have some great knowledge and insight about down payment assistance programs. And I just want the listeners to hear a little bit about what you offer and what's out there, actually, for down payment assistance.
Right, absolutely. And I think I'm so excited, and honestly, I'm blown off by how much is out there, and we are not tapping in. Up to 70% of U.S. adults don't know about a down payment assistance program. So we are here to change it, me and Tamika.
That's right, we're here.
Yes. So a lot is out there. Of course, down payment comes in all different shapes and sizes. It comes through state, it comes through local municipal, it comes through county. So one of the most important one that I think is the most exciting one is through our state, Golden State Finance Authority, basically helping Californians buy a home. It's such a difficult market to get in. Otherwise, they offer 0% down, 3% down, or 5% and 7% down payment
That's great.
assistance. So basically, you can come up with absolutely nothing for a certain home price from your end, or you can come up with a small portion, say 2% or 3%, and they will help you up until 7% in form of assistance. Now, part of that 7%, 3.5% is just a deferred payment loan, which you would pay off in 30 years when you're ready to sell your home, or if you sell home before that. And the other 3.5%, drum roll please.
All right.
That is a grant. That's
Hey,
a forgivable grant.
it's forgivable.
Yes,
That's
absolutely.
great. And forgivable means you don't have to pay back.
No, you don't have to pay back. That's
Awesome.
your money to keep.
Yes.
So it's exciting. Please sink it in, take it in, and think on it. We can jump in with this program. You need the right advisor.
Exactly. And so, and are there lending limits to this? Do you have to qualify?
So the common myths. Let's talk about the common myths that you have to be the first-time home buyer. No. That you have to have a low income to be receiving a grant. No.
That's
That
good.
you have to have zero savings. No, you can have your own savings and still receive the grant. That you have to have exceptional credit. No, we have all done funky things in our lives. And no, you can go on with a 600 credit score,
Right.
or better, or a little bit lower. We can talk about that more in detail. But that the loan, that the down payment assistance that they are giving you accrues interest. No, it doesn't. It's interest free. It's deferred.
That's nice. It's interest free and deferred. Wow.
Yes,
Mhm.
both of it. And it only works with FHA. People believe that it's only works with the government FHA programs or something. No, it's an independent program, works with any lender. Of course, you need to find the right one who can suggest you, but otherwise it works with other conventional programs.
Oh, that's great. Oh, so you don't have to do just FHA. It could be conventional. It could be any other type of mortgage
Absolutely,
assistance.
the conforming loan amount.
That's awesome.
Yes, like Tamika explained earlier. And it's harder to qualify. People believe that, no, it's not. There are some parameters, but you know what? We work around. We figure it out. It's down payment assistance. That's what's going to get you closer to your dream home. Then yes, we figure it out. People believe it takes long time to close. No, if we have our paperwork, if we have our act together, no, it doesn't take too long to close.
Right. So you have to be efficient in what you do.
Yes, absolutely. Again, you have to have right partners with you, kind of, getting you through the process. But no, it should be all good. And limited funding. No, it is an ongoing funding with the state. State is helping us. They want us to buy a home. It's believed we prosper more if we are living in a place where it matters most. No, yeah. So all these myths, that's what I want to kind of get out of. No, you can. So many of us can afford and get into these down payment assistance program. It's all about reaching out. It's all about taking that first step.
Exactly. So those myths, I mean, and again, that's a lot. I've heard those before, and so trying to combat those. So it doesn't matter. No, you don't have to have no money. No, you don't have to be poor.
Right.
No, you don't have to be a first-time home buyer. You can have been a buyer before.
Absolutely.
You don't have to have such an amazing payment or FICO score. That is. There are so basically that includes everybody.
Absolutely.
Everybody can actually qualify.
And like Tamika said earlier, professionals,
Yes.
teachers,
That's right. Let's talk about that.
Yes, the teachers, firefighters, police officers. We want to thank you. We want to tell you we appreciate every single day what you do for us. And that's what the the Golden State Authority is doing. They are giving an outright grant to professionals like these.
What
teachers.
grants?
So again, up to 3.5%.
Wow.
It's a gift. It's an outright gift. We are not asking back. They're not asking back. So it's an awesome opportunity for all you great professionals out there who we want to say we thank you.
That's
every
great.
day.
Well, hey, we're in the tech like mecca. So there's a lot of professionals out here, and that right there, if you didn't catch that, you need to catch it. Professionals, we have help for you too.
Yes, teachers, firefighters, police officers, come find us. Another program that I want to talk about is the Empower program. Now this one comes from the Santa Clara County.
Okay, this is good. Listen
Yeah.
up, everyone.
Yes, this one's exciting. This is the equity sharing program where they provide you with up to 17% of your
17%.
of your home purchase price.
Wow.
They provide you down payment assistance for that. Now, 17% from them, 3% from you
Right.
makes that sweet number, 20%.
20%.
Yep, that means no dreaded MI.
Oh,
People-
which is mortgage insurance.
Mortgage insurance,
Mhm.
yes, that people don't like to pay, but nobody likes to pay. But hey, you know what? You have to do what you have to do. The lenders want their security.
Right.
But the minute you hit that 20%, you're in a sweet spot. And the Empower Equity Share program lets you do
So
that.
that's Empower Equity Share program.
Right.
Okay, okay.
And the good part about this is, so the catch here is that they share the equity. But the awesome part is they share the equity only out of appreciation. They're not sharing the
Mhm.
equity out of the selling price of your home.
Mm-hmm.
They lend you 17% and there's no interest accruing on it. It's a deferred loan. But when you're ready to sell your home, it's 17% of your appreciation. You buy a home for 600, you sell it for 700, it's 17% out of that 100.
Out of the 100. See, that's where people,
Only.
yeah, that's where they think that's a little bit of a difference, but that's really, really good.
Yes.
Only 17% of 100,000.
100,000.
Huh.
Rest is all yours. All the equity that you're building on, they're only sharing it out of the appreciation.
Right.
Hey, come on, we can't be so greedy.
They're
They're helping
exactly.
us,
Hey, you
yeah.
you got to help getting into the
Yes.
home, right? So that's great. And so-
Absolutely.
and then let's see. Then there's one other assistance program, or maybe two.
So CalHFA is there,
Yes.
again another one, which is California Housing Authority helping us out. They do 3% in down payment assistance, 2% in the closing cost. Now, all of us, we can't forget about the closing cost.
No, that's quite a bit. They say about 2%, 1.5 to 2% of the purchase price is your closing cost.
Yes, yes, and it hurts, but you know what, people, it's one time only.
Mm-hmm.
And I understand we need help. Hey, you got good jobs, everything's going on for you in the life. You did not save enough. Hey, happens with all of us. So, yes, the down payment is, you're getting help from either your family or some down payment assistance. You need help for the closing costs too. CalHFA does that.
Nice.
They gets you up to 2% in closing cost assistance, and that is deferred loan. No payments required, nothing.
Wow.
The other is when CalHFA does the 3% in down payment assistance. They have very competitive rates.
Right.
For moderate income, very competitive rates, and for those who are falling in the low income category,
Right.
the rates are absolutely unbeatable.
That's
They are
great. So
just
like it's not like
fantastic.
buying a car and you have to you have like a 15% and you get docked for that.
No.
Got it.
It's very approachable. All these programs, of course, there's a catch, right? There's no free lunch, but it's doable. They give you the boost which is needed to get into the home of your dream.
So all these have parameters though. So obviously, yes, they are out there. However, if you're speaking to a mortgage professional, the biggest thing is knowing, hey, why don't you bring it up or talk to someone that actually knows. You know what? Before we even go this route, let's see if you qualify for this route or this route or this route. So it gives you options in order to choose.
It does.
And of course, yes, they do, and I'll talk about that a little bit later. There is parameters that go along with it, and sometimes it's a little bit longer. So in a market like now, where it's a little bit slower, some things are sitting for a little bit longer, this is the perfect time to go out and do these type of programs, because 45 days, 30 to 45 days on an average it takes to close these particular loans, maybe even some sooner. So these are something that if you're thinking about it, is something that you should probably jump on now. And we're going to talk a little bit about some success stories in our next segment, or like a success story. And then also, too, again, I'm getting to that 150,000. I'm getting to it. That's going to come in the next episode. So stay tuned, and we're going to talk more about maybe about one or two more programs or assistance that's after, and then a story, and then I'll get into that 150. Stay tuned.
Did we do good?
I think so. Joel, how was that? What was the timing on that? Because I didn't have my timer. That was pretty. Wait, what did it end in? 'Cause my- So this segment, okay. So this segment would be how long? 10:20. Got it.
Okay.
I'll have my clock on here now.
So we are talking the story, right?
So yeah, unless you wanted to, did you have the departing residence
Yeah,
program?
let's talk about the departing
We can do that one, and then bank statement, expanded access. You can touch on those two. I see departing residence program, which is cool because people, and then the expanded access.
Right.
We can kind of hit on that, and then we'll talk about the sex story. It's not that long. It seems like you kind of just keep it.
Yeah, I can share the story about that client in Manteca.
Yeah, and you keep that, and then at the very last part of it, and then I'm going to talk about the 150. Yeah, and what I'm actually doing now, I'm going to give some information on the AC boost in Alameda County. You guys, listen for it. Those of you that are in Alameda County, there's an excellent program, and my two clients, they might be tuning in right now, I'm not sure, but I'm so thankful that they came back to me after resetting themselves and have an amazing program that they can get up to $150,000 for their down payment on a home. What? And we'll talk about that in a second. I'm thinking, 3-5 minutes. We'll talk about that. Kind of wrap everything up. Story. So in about 5 minutes, then I'll talk about that, and then the last 5 is just kind of giving out information and close. Fun, right?
Yes.
It's fun.
Well, you're confident. I'm getting there.
No, this is. Hey, look, Joel. How many times have I done this? That's it.
Unbelievable. Well, maybe 6 times would be charming.
I know. There you go. 6 times the charms. It's the second time actually because I had more confidence. Wisdom. I had a little bit more wisdom with some stuff. All right, so let's go. I'm going to do a little recap and let's introduce it again. All right, we're ready. I like that angle better. All right. So we're back again. I'm equipping people of faith in the home buying process. I have a special guest, Kumud Jain here with O2 Mortgage, and she's dropping some knowledge, some wisdom, and some insight on some loan programs and assistance programs that can get homeowners into homes. And just a little recap, we've talked a little bit about the education component, talked about types of mortgages that are out there, conforming loans, jumbo loans. We talked about fixed versus adjustable. We even talked a little bit about some government insured home loans, and talked, of course, about some down payment programs. I mean, good God, you have 5%, 1%, 2%, 7% programs, 17% programs that will help you get 20% down. I mean, come on. And if you missed it, you definitely got to stay tuned and actually hear it on Saturday mornings at 9 o'clock, or, you can listen to this Facebook podcast in a little bit, yeah. But we're also going to finish it out and talk a little bit about some assistance programs, and specifically, we're going to talk about the departing residence program and the expanded access program. So go ahead and talk a little bit about those.
Hello again. So the departing residence program, here's the deal. You have a home. You want to buy a bigger home. What do? You cannot be you cannot be counted for the mortgage payment of your old home and your new home.
Right.
So we need to figure out the math. What we do is we have programs where we help you count only your principal, interest, taxes, and your insurance for the new home
Mhm.
and do not hit you for the mortgage payment of your old home. We count that in your qualifying debt to income ratio. I hope it makes sense. Debt to income ratio is all your debts put together, including your mortgage payments,
Mhm.
kind of divided by your income and see where you stand. Now, a very happy number is 45%. That's what they want to see. And when you plan to have 2 mortgage payments, it's very hard to
Right.
qualify under that number.
Right.
So that's where this program comes in play, is where we do not hit you with the departing residence mortgage payments, but only kind of qualify you based on your new mortgage interest payment for the new home. In fact, we go a step further, and the equity that you have built in your old home, we take that equity and try to use it for down payment for
Oh,
your
that's
new
great.
home.
Yep. Yep.
And it's all based on, contingent on the thought that you would eventually sell your home. Sure, and you will not, depending on you. So that aside, we're just counting your income, your debts for the new home that you want to move. And you know what? That's a huge step when you are ready to upgrade. I think that's a good program to help you out. When you have this one home and you're ready to move into a little more, stretching your hands and legs out into a little more, yes, we can help you buy that home, bigger home, without hitting you for the old home.
That's great, because there's a lot
I
of
think so.
people, especially in this area, that are looking. I mean, you have to leverage, right? That's
Right.
a lot in this game. You leverage your home to buy, like, maybe the dream home that you actually want.
Absolutely.
And I talk to my first timers about that all the time. Like, hey, just get your foot into the door. Something that you can sit on for 5, maybe 8 years. Especially if you don't have any children, you're in an even better position. And then situations like this that come up, like, hey, what are we going to do? I had clients that have done that and been very successful in moving into their new homes. It's great.
That's the beauty of
and,
being
and,
in
and,
it, right?
and knowing the right realtor, and I'm telling you, it's a timeline thing that happens with all of this too, but knowing the right realtor and having the right team, basically it comes, and it's actually really, really a smooth process.
I think so. Having the right partner in process
Mm-hmm.
makes that difference.
So expanded access.
Yes.
Touch a little bit on that.
So that is our alternative document program where, you're self-employed or you want only your bank statement as your income. We do not want to look into your W-2s or anything. You only have your bank statement, and that's what we are, looking at, your 12 to 24 months of average of your either business
Wow.
or personal bank statements,
Mhm.
and going off that income. I mean, the interest rates are different, these programs are different, but hey, you know what, we're qualifying you based on your income versus, what your tax return shows. So
Exactly.
I think it's a safe haven for all the self-employed out there. I think we should definitely look into it.
Yeah, because there's a lot of
Yes.
people that I know that are self-employed entrepreneurs in this area, and some of them think, oh, this is just no way. But actually there is.
Yes,
and actually
there
they
is.
brought that out. They took it away for a little bit, but they're bringing it back. Because I know that got us in trouble a little bit back in 2009 or so. And it seems like they're bringing that back, but it's come with a little bit more tighter guidelines.
Yes, and as long as we understand our affordability, and
Yes.
and again, that's why I keep insisting on the same point that you have the right partner, the right advisors. As long as you're in your affordability level, everything's good. Let's not jump ahead of what we cannot afford. Like, that's what we are here to, professionals are here to
Right.
kind of guide you.
Right. Now, do you have a little success story, kind of like about a minute or two of the success story that you've either been a part of or just even with any of these programs?
Oh, that's one. Yeah. I do have one to share, and it's such a nice, heart-touching little story. This couple comes to our office and wants to buy a home, and great, they took that first step because it's hard. It's very, very hard. So they come to us, and it's not like everybody who walks in is absolutely ready. They need the guidance. They need to understand. They come in, they say they want to buy a home. We ask them, great, where are you living? They give us their rental address, and we say, okay, 6 months, great. Where were you living before that? There's a quiet moment. They're looking at each other.
Right.
They're uncomfortable. We're like, what happened? Like, where were you living before this? And they said, we were homeless.
Homeless, wow.
Yeah. And you know what? With a little guidance, it didn't happen overnight. With a little guidance, with a little help, holding hands, we kind of prepared them. got use of one of the down payment assistance. That was the Golden State Finance Authority.
Nice.
Gave them the boost they needed. They were, well employed. They were both having good jobs.
Did you need help?
And
Just to step
now,
up.
absolutely, and now they're happy homeowners in Manteca, maybe
Hey!
moving on to their next house now.
Exactly.
So I think that's quite a heart-wrenching story, but it happened for them because they took that first step.
Exactly, and and you know what, and I think that's the biggest part too, overcoming the pride issue, right? Everyone has a smear or something kind of stained on their credit maybe, or their past history, right? And so it's taking the steps and understanding that the people that you come in contact with, should you trust them, and you should not look down on you. And matter of fact, they should actually be saying, you know what, look, I don't care what you've been through. Let's make this happen. If it's possible, I'm going to work in order to make it happen for you. It may take a little bit of time, like she said, sometimes about 6 months and stuff. I've had vets that did it. They had to go and clean up their credit. It is what it is. You clean up your credit, you get yourself in a position in order for you to actually purchase a home and become a homeowner. And that being said, I have to say, about this program that I talked about, right? It's called AC Boost. And I have clients that I had met probably about 2 years ago. I've known one of them for a long time, but they came into my life again saying, okay, we're ready to buy. We're in this program called AC Boost, and do you know this is the Alameda County program that literally can lend up to $150,000. Look, the website is this. It's acboost, BOOST.org. So acboost.org. And on this, it actually talks a lot about, just the qualification factors, and it's in response to the high cost of housing in Alameda County. And taxpayers voted to give buyers a boost. So this is the taxpayers of Alameda County voting to give this a boost, right? And the cool thing about it is it's a shared appreciation down payment assistance loan to buy a home in Alameda County. So no payments are due during the term of the loan, and it makes your mortgage payment affordable. So less than $150,000 if you get into a home, you're in it. So of course there are stipulations that you have to have. I think some of the things that you have to be within 100% of the area medium income bracket for that area. But they even have other things too. If you're close to a transit, like I think within half a mile, you can get even more of a discount on your mortgage and more assistance as well. It's crazy. Now, granted, they want to see things as far as your, of course, your credit. There's classes that you have to take. You have to take a first-time home buyer class. You do have to, fill out a mortgage, form application. You have to do all of that. And you do have to work with a lender that's tied to this program, which I have. O2 Mortgage may have it too. But then the whole point is, make sure you get a home inspection, a pest control inspection, and an appraisal on the home. And if all checks out, it's about a 45-day close or so. Yes, the loan contingency period's a little bit more. It's about 25, 30 days. But like I said, in this time frame when things are moving a little bit slower, this is one of the perfect times in order to try to capitalize on this particular program. And my clients are over the moon because they get to qualify for actually a lot more than they did before when it came to me about a year and a half or so ago. So that being said, we're going to wrap things up in a little bit. We're going to come to a close, but we're going to recap a little bit. Kumud, thank you so much. Everybody, stay tuned for a second. Got some last-minute information to give you. Stay tuned. Oh, yes. No, the timer's going off. Yes, timer. Yes. Exactly. Let's do it. So is it 5:15? What's the 5? 5:25? 5:25. All right. I'm getting there. I'm getting the time. Right.
It's hard, right? Keeping that in mind along with the flow.
It's not easy. No, it isn't. But hey, I caught it by the second. That's the second one. But yeah, you got to be able to feel, because I'm not a woman of many words. So to learn how to
No, but
fill
right.
it in with actually things that are actually good.
Right, and that's what I'm thinking. When you get excited, either you're in a flow and you cannot stop, like just cannot cut dry
Right.
at that point,
Yep.
or you cannot produce something to fill in the gap. So yeah.
I'm trying to do like, so, yeah, okay, cut.
Seriously, I think teenagers, they use 5 words in a sentence
Mhm.
and 10 times like.
Yeah.
Yeah, yeah,
Well,
I
that's-
thought I like.
Well, that's California too.
Is it?
Yeah. I don't say it now, but yeah, if you probably catch me, I've caught myself in the like. All right, so lastly, we're going to do a recap. Talk about being on the fence. Camille, we're going to give you a shout out. We're going to put your number on.
Thank
Okay.
you. Yes, please.
And and I'll put your information on the Facebook
Perfect.
outlet as well. And
Great, my friend.
yeah, come on, yeah, I'll do your email address, your number, and then I'll do your email address.
Kind of. Yes.
To
Kumud@o2mtg.com.
Yep.
408-203.
At O2mtg .com.
And you have my 408 number, right?
Yeah,
408-203.
408-203-3978. Said that again. 408-203-3978.
You know where to find me.
Yep, that's right. All right, let's do this. Let's do this 5 minutes and 25 seconds. Thanks for staying with us. Is this only in California? Yes, it is. All right. So we're finishing up equipping people of faith in the home buying process. And I saw a question out there that, yes, is it only in California? Yes, it is. Only in California. So the current residents, and I'll answer the question I see there by Amy. I'll answer that in a little bit if I can get to it. However, I just want to thank Kumud Jain with O2 Mortgage for coming and joining me. And hey, she's a wealth of knowledge and information. And here's her contact information. It's 408-203-3978. That's 408-203-3978. Or you can send her an email. Why not, right? And her email is Kumud, which is K-U, M as in Mary, U, D as in dog, at O2, number 2, mtg.com. So Kumud at o2mtg.com. She's been a great guest, and she's a wealth of knowledge and information. You have any insight, you want to reach out to her, definitely. And I'm all for these assistance programs, and I hope to have a really, really good update and a great praise report when it comes to working with my clients right now that are in one of these programs, especially the AC Boost program. Again, that's acboost.org. AC is in cat, BOOST is in Tom.org. Check it out. See if your lender has. If you do have a lender, hey, that's great. See if your lender actually, is an approved lender for this particular program. If not, contact your girl at TamikaEllsworth.com. That's TamikaEllsworth, Ellsworth.com. And hey, look, if you're on the fence, I say this all the time, if you're on the fence and you're not sure whether or not you want to buy, but it's stirring something in you, I want to work with you. I really do. I want to talk with you. I want to meet with you. You can go to my website, again, that's TamikaEllsworth.com, and put out information, send me a contact, and we can meet. And I'd love to get you from the point of sitting in your seat to actually talking with a mortgage professional. I got so many of them that have many different personalities, many that you can choose from. And I'm with you on this journey, and I want to be. I love transformational stories, and I love when people didn't think that it could happen, and it actually happens to them, right? But if you also are good to go, so Tamika, I don't need this faith thing, I'm good. I want to buy a home, I already have the information, knowledge, and insight. I have wisdom at my side. I want to purchase a home now. I want to work with you too, because that's even great, because it's a team effort, right? And I believe that everyone that I have worked with, the success stories that I've had, I want this to be for everybody. I want everyone to have these type of stories in their arsenal that they can talk about, whether it be a friend, a sister, a brother, an uncle, it doesn't matter. But why not you, right? I want you to have that story, and that's whether you have a little bit or a lot of money. It doesn't matter, because it still takes faith to get to the point of thinking that you can actually do this, right? You can actually go out and buy a home in the Bay Area, especially when everyone says that you can't, or that it's a little bit too expensive out here. Hey, talk to me, believe me, I'll tell you some stories on people that thought that and are homeowners right now. Some of them actually going on their second homes, as a matter of fact. But then also, you can also catch stories like this that I'm saying, talking about people and some amazing stories. And then some of the businesses that I highlight. I highlight a lot of businesses around my local area. I love business owners and entrepreneurship. That's a part of my passion, because that's who I am. But you can catch me on the American Dream TV show. That's every Thursday. It comes out at 7. But my newest episode is going to be airing on the 26th. Oh, my goodness. On the 26th of this month, and it's kind of cool. It's a barbershop owner, Be Pizzazz. Yes, that's my mama, but she's a business shop owner and just an amazing woman that's a staple for 30-something years in the Campbell community. And so that's the next show that's coming out on the 21st, the day after Christmas. You can catch that on Roku, Amazon Prime, or even Apple TV, or streaming. You can catch me on my website as well. You can catch it there, or American Dream Network.tv. You can catch it there as well. Again, I thank you so much. We have one more before the new year hits. You can catch me again on the day after Christmas. But again, I'm so happy you tuned in, those that you are online and those that you are actually on the radio. And gosh, until next time, again, this is Tamika Ellsworth. And, I'm sitting here equipping people of faith in the home buying process. Thank you so much. Have a blessed holiday season. And shoot, if I don't see you or hear from you in the next podcast, I thank you to have a wonderful 220 coming soon. Timer. Yes. 22.
Yeah. Yeah,
no, I didn't. Okay.
Yeah, you did.
Okay. 2020. Isn't it cool? Look, so you can do that. You can freaking move things around. Like, I didn't say it. I said it, but I didn't say it. But I didn't say it. Isn't that crazy?
I love it.
Thank you, everybody, for tuning in. Nicole, what's up? See, that's a homeowner right there.
Oh.
Super excited for their beautiful home in
that?
Oakland. Yeah, absolutely. Her and her wife, actually, inside there. So, hi,
Wow.
Nicole. And then also Nico, exactly. But then also Elise. Thanks, Elise. So that was it. I mean, what did you think?
Nice. I think it was wonderful. It was happy and uplifting.
Yeah. I hope so. Shoot.
Totally.
That's who I am, behind the scenes and in front of the scenes.
Yes, you are. You know what? That's what I love about myself too. I'm same. I'm same. Like,
Absolutely.
I cannot be a different personality. And you were. The minute I met you and what you are here right now, it's absolutely the same person.
Yeah,
Exactly.
That's good. That's good to know. That's good. Husband, the same. Okay.
Yeah, whether you like it or not, this is what you got now.
Right on. Well, no, I thank you very much, and
Oh,
really appreciate you
absolutely.
taking
My
the
pleasure.
time to come out and educate with me. Bye, everybody. I'm going to be signing off. Appreciate it. Thank you so much. Amy, what about your current residents? Do they allow applicants that do not currently rent but are living rent-free with family? Actually, Amy, they do count the rents. That can be used as a tread line, right?
I'm sorry.
Say, for instance, you're renting with family and you don't actually have a mortgage, just like to show that you have some type of a tread line, pretty much.
Absolutely. Yes.
So I don't know if you're seeing that, Amy, but hopefully I can respond to that. But yes,
totally.
Current residents, do they allow applicants to? Yeah, 100%. Because a lot of people don't have a mortgage, and a lot of people are but just make sure, this is a good thing for all of you guys. Make sure that if you are renting, especially with a family member, a parent, whatever, try to keep track of it.
Yes. Keep your
Seriously, try to keep like some paychecks, even if it's cash. Try to keep some type of stubs or some type of record of your rental your rental payments.
Yes,
because that's going to make a big difference.
Your rental paid on time makes a big difference to the lender. They want to see that you've been a good borrower. You've been paying on time. You've been making your rent payments on time. That's a big plus. So yes, keep that record.
Exactly. So yes, Amy, that totally works, and it is considered a viable source of what they look at when purchasing a mortgage. Okay? I don't know if there's any other questions in here though. But thanks everybody. If you have any other questions, definitely hit me up. You can DM me on Facebook. Either one, whether it's my personal or my business, doesn't matter. Thank you so much.
What's the DM? Direct message. Oh my God. PM, personal message, DM, direct message.
Okay, I do want to save it. I do want to share it.
Yeah, share it and I'll put it on my Facebook.
Share it right now. Hey! That's right, she was awesome!
Ah, you're
Bye everyone.